Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's Friday. I slept in a little bit today because Samsung decided to update my phone in the middle of the night, and so like my alarm application wasn't running and didn't wake me up. I was a little bit late, but I woke myself up. My biological clock is okay, and I did get up, but I was a little bit late. I haven't eaten anything for breakfast here, so let's go through the charts. I'm gonna go and grab something to eat. I'm gonna come over here. So in the treasuries, we getting a pretty ugly move here overnight. I mean, yesterday it didn't really go anywhere, and was kind of like, why isn't it? It didn't really react to Fed speakers. Some of the Fed speakers were a little bit dovish, but then the hawks came in and were really like, no, like seriously, guys, we're probably gonna go to 4%, and so we're getting some dead cat bounces and so forth, but pretty ugly action on the downside in the treasuries, and the S&P 500 is falling down as well. Then we've got oil. Let's start with oil. I don't know why I skipped oil there. Oil having a downturn, still having trouble holding prices above 90, but they are trading quite a big range in oil these days. Volatility over there is just insane. Gold and silver continue to be pressured as the treasuries get hammered. And then we got copper. Copper doing okay, holding its recent gains on the week. And meanwhile, over here, the dollar almost to 108. What? Wow. The dollar is a problem, my friends. The economy cannot handle the dollar staying too high. It's just going to destroy exports. And so, of course, that means that Bitcoin's going to have to take a little bit of a haircut, and they are down this morning as well. So, how are you guys doing? Come over here, check Twitter and so forth. Wow, okay. This is just going through here. Cool. Oh, wow, that's cool. The Blue Angels in Chicago flying downtown. Okay, Joseph Wang pointing out something important here. For those following, you can actually see how much mortgage-backed securities the Fed has purchased and yet to settle. It's declining, and next month is the first month the cap will be above the principal paydown, so there will no longer be new reinvestment purchases. So it could start to affect those markets. Elon Musk posted a picture of a Sphinx cat smoking a cigar. Okay. All right, well, we're in an interesting spot. Let's see here. Nick Timmeros, St. Louis Fed President James Bullard said he's leaning towards favoring another 75 basis point hike next month. I don't really see why you want to drag out interest rate increases into next year. Oh, I see. Because he's like, yeah, you are going to have to go to 75 basis point. You are going to have to go to 4%. So you might as well do it now. That's what he's saying. Oh, I need to come back over here so you can see my face. Well, I got a banana here, so I'm going to eat my banana. You guys okay over here? We got everything set up good? Okay. A little sparse this morning. I think it would be though, because it's like late August. Look at I mean, come on, next week the school starts, and if it's not school starting, then you're going on vacation. This is like the worst trading. Isn't next week Jackson Hole though? I haven't been thinking about that all week. But next week is Jackson Hole, I think, right? Yep, Jackson Hole Symposium next weekend. I want to go. Okay, well. Oh, somebody in chat promoting technical analysis. Okay, well, so what do we got here on the flow? So there actually is some much better liquidity here this morning, although it is a little bit more sparse above us than it is below us here. That's very interesting. May result in a little bit of a pullback. They're kind of in a hole. It would be, I think it might be difficult for them to continue pushing it from here. I don't think we had any news or anything there, right? Yeah, it's no news Fridays. So this could be a really sparse session. And it is going to be a short session too, because I'm going to leave a little bit earlier at 10 o'clock Eastern time. So yeah, you keep an eye on Bitcoin though, man. They does not look too happy right now. So I'm going to eat a banana. I'm going to turn this over to like basic charts here so you can see what's behind me. All right, while I eat. Let the games begin. There's no games. What the hell are you talking about, Captain Price? It's a no news Friday at the end of the summer. Kids start school next week. Nothing interesting is going to happen. Interest rates might continue to rise here. We might get a slow burn on interest rates, but otherwise, this is probably going to be a sleepy session, man. It is options expiration. I don't know what you want action? You probably get action next week. You're trying to find the cheapest what? I got myself a sandwich here because it's too hot. Venezuela stops oil shipments to Europe as alternatives to Russian energy dry up. I need to stop reading Zero Hedge because it just makes it seem like everything with energy is just like looks terrible. Trading floor or audio reports, hedge funds pile up bets against the S&P 500's big summer rally, reports the Dow Jones. Funds with a short bias also attract large inflows. $125 billion of institutional short position has been building up against the stock market, driven by hedge funds, according to PNB Paribas. Bloodbath and Beyond. Oh, man. Like I was saying the other day, I was watching the book on Bed Bath and Beyond on Wednesday when it collapsed, and I'm telling you, you don't want to be involved in that thing, man. It is, if people understood what was going on underneath of the surface, they would not be looking for the trade that they are, and it's really quite eye-opening to me that everybody expects it to push further when like the short squeeze basically already happened. So yeah, the cheapest margin from a you're gonna do something irresponsible, aren't you, Oceanic? Throw on as much margin as you can in YOLO. Don't look for the cheapest margin, guys. You should be holding way more than what the margin requirement is. They only offer those low margin requirements because, it's like the one thing that we can see that maybe we'll pick one broker over the other, but it's not really. Yep. Oh, man. Yeah, I'm just seeing some people on Twitter here complaining about the euro because the euro is below 0.01. Oh, you got Joseph Wang's book. That's good. So something interesting that I would point out is that Joseph Wang and Mr. What is his name? Not Jim. Freaking Nick. There you go. Joseph Wang and Nick Timmeros have kind of been tweeting at each other about Fed policy and what like the meeting minutes said the other day. Was kind of interesting, but I think that Joseph is kind of turning into like a top level commentator all of the sudden on Federal Reserve policy. Oh, well, you for under 500 euros, definitely, because right now I think the going rate for micro ES is like $50. right? But for the full ES contract, I think you can get 450 at like AMP and others. Treasuries are making a slow little creep up, but it doesn't look like they actually want to do it. It's just they're kind of getting sucked back up. It is nice. I think that'll be a good book for you to read if you want to trade treasuries. I haven't read it. It's on my stack. Maybe that'll be next. I gotta finish reading The Fundamentals of Data Engineering. This book I've been learning stuff with this. I've also been spending a lot of time learning Vim. I'm really happy with what I've learned this week on it. I've spent a little bit of time on it every day. And yeah, I'm really happy. I've also been doing my Series 65 every day. So, progress. I am a programmer by day. I'm a site reliability operator. Engineer operator. What a site reliability engineer is what I do. And largely what we're doing is we're setting up infrastructure to monitor with Vigilante by night. Yeah, micros are cheap, dude. Yeah. The micros are cheap. Really, they should require more margin from you to trade the MES. But yeah, I don't know what it was that prompted me to do it. So for some reason, last week I was like, I need to get more into Vim. But I was like, I'm tired of editing this stuff in like the simplest of text editors, and I really want to like reduce my keystrokes and everything. So getting into Vim, and I've learned a lot of keystrokes that I think will be very, very beneficial to me. Like, I love that I can just come in, I can go to the line that I want. Normally what I would have to do to like start code on a new line, I'd press and enter. Now I'm on the new line. Maybe enter again, start typing. So I have to move my hand. It's an extra keystroke, right? I have to go to the end of the line first, then I can make a new line, right? In Vim, you just press O when you're there. Emacs, folks. Okay, so here's the thing. I don't really understand the Emacs versus Vim thing. Wow, they got smacked down fast there, didn't they? Yeah. It just kind of, if you want any idea of what the treasuries are likely to be like, I think that you could very easily make the bet here right now that the 10-year is going to go to 3%. I think that I'm going to hold off because I haven't eaten my food here and I just wasn't prepared for today. Also, I'm going to end early today, so I don't really want to put on any risk, but it'll be really funny, frankly, if they don't trade 3% in the 10-year today. No, I don't get, because Emacs is basically a GUI one, right? So they're not really comparable, like, or let me put it this way. What is the driver for Emacs over other more advanced, well, like VS Code probably is the best one now at this point, for other more advanced GUI editors, right? I've never really known it. It's just like Vim is basically a completely different beast. So like the Emacs versus Vim debate was really between is it better to have the steep learning curve and be really efficient with your keystrokes, or is it better to just be productive right out the get-go? That's what that. So I think that debate was like overstated. Now I'm all in with Vim, but Emacs has its pros too, so it's so extensible. Oh, okay. I have to say though, like with Neo Vim and all that stuff, like Vim has become quite extensible, but it sounds like the Emacs allows extensibility for it to be beyond just a text editor, right? You could probably trade from Emacs if you wanted to. There's evil mode, which emulates Vim behavior. Maybe at some point I'll go in and learn it. Like the thing is that I could always come in. I always knew enough about Vim to like get in and like edit a file, but I never like remembered all of the keystrokes and all that stuff. And now I'm coming in and I'm like remembering all the keystrokes and even getting into some modifiers so that like, oh, okay, I can. I'm at the beginning of the line, but I want to go and edit this thing in between parentheses. I can go and jump to the parentheses and then start editing the thing inside of that. You know, 3 keystrokes deletes the whole word and then gets you to where you're typing in the new thing. That's the level that I'm getting at to now. And I really wished that I had done that way back like 10, 20 years ago, you know, when I was a kid. It would have been a lot more efficient. Although this opportunity to use or to use Vim within a much more put together IDE like VS Code is only a recent development. So, but it's pretty cool. It's pretty cool. Okay, let's eat my sandwich. So I just want to note here the charts. On that last little move down, the 30-year just got slammed down to new lows. The 10-year didn't break new lows and is bouncing back a little bit more quickly. And so the result is quite the steepener here this morning. All right. So I put up a poll here. Treasury's bounced up a little bit higher here. I'm still seeing steepening. But do you think the 10-year will get to 3%? I mean, it's so close. It would be really funny if they missed it this week. So poll is up. Now, on the other side of this, how far is this rally here in the Treasuries going to go? Because they filled the gap there. If I really wanted to go long, I think this would be the spot to do it. But, well, let's not say it's the spot, but it's maybe a spot. Well, my nose is a little bit better, but when I was blowing it there, I could feel all the stuff coming out of my ears. Okay, well, let's pull up some meme stocks. Well, we're kind of chilling. I don't know if, in the next hour that anything too interesting is actually going to happen. If the treasuries are heading up, it looks like they're going to take another leg up. I don't know if that's the place for me today. So let's come in here and look at a 1 minute chart. Woo, man, it was quite ugly overnight in Bed Bath and Beyond. It really is a bloodbath over there, man. We're 50-50 on whether we're going to hit 3% today. Oh, there's only 2 votes. There's only 2 votes. We can do better than that, folks. We can do better than that. Let's read. Okay, so here's a story from Simon White, Bloomberg Markets live reporter and commentator about Jackson Hole. Anticipation that Powell's Jackson Hole keynote will showcase his inflation-fighting resolve should depress equities in coming days. However, it's hard to envision how he can successfully cause rates to reprice, and the speech will likely fall short of expectations. It's an article of faith among most analysts that inflation is too high and that it requires a significant tightening in financial conditions to bring it back to target. Furthermore, the 2023 Fed dots are 51 basis points higher than the January 24th implied Fed funds futures. With equities still in a relatively buoyant frame of mind, Powell seems to have a free shot at establishing his hawkish credentials. There's a good chance the Fed chief will craft a speech that signals that he is focused almost solely on inflation at the risk of the almost solely on inflation, the risk of the wage price spiral, and the costs of inflation expectations getting out of hand. As Bloomberg economist Yelena Shulyateva has suggested. What a name. Wow. Who is this lady? I want to know what I want to know. You get a name like that. That is quite the last name. Oh, she looks nice. She looks she's got that kind of Eastern European nose. Or look. Probably from Eastern. Yeah, it's probably from Southeastern Europe. That's a crazy name to pronounce, though. He should try to convince markets that these risks far exceed the costs of a bumpy landing. However, what more can he say that he hasn't already said? In the last press conference, Powell implied that the headline inflation measure was unusually important because of its role in potentially de-anchoring inflation expectations. He also said nothing works in the economy without price stability, and we won't see it, the fight against inflation, as a trade-off with the employment mandate. This language would need to be significantly sharpened, or strong research findings would need to be produced to illustrate that the trade-off should be put on hold for there to be an impact on the longer-dated Fed expectations. Will markets be able to believe that the Fed will go on hiking once a sizable number of people are put to work and the noise of the midterm elections is behind us? ? Are there precedents for the Fed dots sharply being disconnected from market pricing and for the markets being right? For instance, the market was pricing 1.75 for January 2020 Fed funds on January 13th, 2017 versus a median dot released on June 14th, which had the Fed funds at 2.9. And the gap widened into September. It turned out that the market was right and the effective funds ended 2019 at 1.55. Yeah, that's probably the only real example we have that would be relevant here, isn't it? Granted, he could choose to focus on the need for tighter financial conditions or choose to flag a short-term front-loading of hikes at faster pace than market expects. While both are reasonable for equity markets to worry about, there are reasons to be skeptical that either course of action will be taken. Simpler than trying to deal with expectations further out would be to flag an imminent front-loading of hikes at faster pace than the market expects. Presumably, the very strong labor market and high headline inflation can be used as justification. Powell could easily communicate with Broad ahead of time to get buy-in, and Bernanke probably did in 2012 to flag September QE3. However, this is not the norm for Jackson Hole, which tends to deal with issues at a longer time horizon. Furthermore, it's not short-term pricing that's the problem. The January 23 Fed fund futures are already 11 basis points north of the dots. Another method would be to talk about the need to tighten financial conditions in the short term, which would imply that longer term rates are too low and that the Fed would not respond to equity weakness. However, in Powell's most recent press conference and the minutes, all references to financial conditions indicate that the Fed is happy with the tightening so far, and there doesn't seem to be recognition that these conditions are too loose. Indeed, on page 10 of the minutes, which describes a notable tightening of financial conditions, is quite typical of how they are described on all 9 occasions. That is, Fed might want conditions to tighten over time, but there seems no urgency in recent communications. Really? So you don't see any signs of excess in the market that might justify tightening financial conditions, huh? Okay. Maybe that's how they think. One final point here from Zero Hedge is that contrary to the Fed's view that financial conditions have tightened notably, just the opposite has in fact occurred, because as Goldman showed recently, the 20-day period since the July FOMC has seen one of the biggest easings off of financial conditions driven by the surge in markets on record. Yep. So I think, and you know what I didn't see in there that would interest me is, do we see something from the Federal Reserve about how flat the curve is? Okay, now we're getting Fed's Barkin speaking. He says, I expect inflation to fall, but it may bounce around. Activists investors letter rekindled a long-running debate at Disney. What to do about ESPN? Yeah, ditch it, because Disney is doing a terrible job with it. That's what you should do. There's way too many pundits in the financial media today, huh? It's not finance. Here's the problem, Cyrilex. Everybody's an influencer all of a sudden. That's what it really comes down to. Is y'all's got on TikTok, and TikTok does this thing where, like, somewhere within your first 10 posts, you're gonna have one post that like blows up, and then you're addicted to making content. And yeah, then everybody's like, okay, well, how do I continue to grow my TikTok following and become a billionaire influencer, or whatever it is that you're shooting for? Oh, well, I need to provide value to people. So something that I've noticed is it's starting to show me a lot of stuff about music production. Now, here's the thing. I am no expert on music production by any means, or at least I've been doing it for a really long time, but I don't think that I am like a leader of thought on it. When I come in here to day trading, I find that I'm very often ahead of the curve. I very often feel like I'm ahead of the curve, at least for the retail trader. Okay, so I do think that I bring a lot of value to the markets here with what I do. But music production, you know, the stuff that I would share, it's just the stuff that everybody else probably already knows. It's like, here's how our compressor works, etc., 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 right? But TikTok keeps showing me all of these videos on music production, showing me stuff that I basically already know. Things that seem like really simple to me. And I'm looking at that and I'm like realizing, oh yeah, these are people that have been doing it for like a year. Learned stuff from some other influencer. Maybe they learned it from TikTok and they're just copying their video. Right? And why does that happen? Because, well, everybody wants to be an influencer now. So, yeah. I'm talking about regular media. There are a lot of outlets for financial news. Like we have the Federal Reserve press conference on Fed Day, and you realize that every person that's talking there is like their Fed focus on on a website, and each one of those websites basically has like a finance section, you realize how big finance really is, right? You get to the top of YouTube in finance, like Graham stuff, and there's a lot of money in financial news, as there should be, as there should be. Unfortunately, there's a lot of things about the market that the general media don't seem to understand, that the general person don't seem to understand, and this whole like this. I don't think that people understand the long-term consequences on the economy of something like a squeeze at Bed Bath & Beyond, right? Because if all of these retail traders come in and blow their money on Bed Bath & Beyond, that's money that could have been spent on something more useful. And everybody will tell you, oh, well, that if they're buying it, that must mean that Bed Bath & Beyond is worth more than it really is. But that's not really how it works. Markets are not informationally efficient. What moves the market is orders. So all that means in Bed Bath & Beyond is that people are buying it. And it could have been completely triggered by the guys over at Bed Bath & Beyond. I mean, heck, the guy sold out pretty quickly. You do kind of have to wonder and consider the possibility that this guy, Cohen, just spiked it. Just to make money off of it. That he came in and did that knowing that the retail traders would come in and spark a stop run and create volume for him to come in and turn around and get out. Well, they are coming back down to the bottom there awfully quickly. I'm not hearing anything from my news squawk for some reason. Is my volume here wrong? Hold on a second. An OLED laptop. No, okay, my volume does work. I don't know. But Barkin is speaking Fed to do what it takes to return inflation to target, but it will not happen immediately. But the treasuries did come down here to the lows. Again, I'm not going to trade it. Look at 30 minutes here. Again, I am going to end the stream a little bit early today. Sorry. A few weeks ago, CNBC had a financial analyst on who said the market was going to crash on July 5th because gas prices were so high and Americans were going to pay the price that holiday. I remember some of the dire predictions, but I also kind of remember people saying that it might cool off after the holiday, yeah? Here's the issue that I have with almost all analysis that I have out there. Is an analyst will come out and will say, okay, this is likely where the economy is going or where this particular thing is going. So like, I think maybe a good example would be Meet Kevin when he came out and he's like, oh, well, there's going to be a famine. So he sold. Okay, well, he sold. He did avoid a lot of downside volatility. I don't know if he bought back in or what he ended up doing, or if he took more, if he got back in and took losses or what, but his overall thesis was wrong, or at least early, that we didn't have a collapse in the markets here this year because of like a famine or anything. Might be a thing next year. I don't know, but there was like some fundamental misunderstandings about how things go. But the disconnect here is the disconnect between thing and orders, right? I see this from Michael Burry all the time too. It's like, well, the bear market's probably not over. These valuations are too high and all these sorts of things. And while he might be right about those particular things don't necessarily mean orders, right? Because the Federal Reserve could come in and prop things up, or Congress could come in and prop things up, or there could be other things to counter for it, or whatever the deal is. Like, again, anytime you're making a prediction about markets, something that has to be a part of your equation is that it's going to cause orders like X, Y, or Z, you know? Well, and the reason why so many people missed out on this rally that we've had over the last month or two is because people discounted the orders. They didn't sit down and do the math and say, okay, how much money has to be invested this month? What do all of these strategies and stuff have to do? When the people, the flow traders that were coming in and doing that kind of analysis, they said that we were going to move up, and they were right. The flow traders got it right. And you'll find the flow traders, they get it more often than not. And when they don't get it, it's because an unexpected event happened. Kevin is the type of guy where things work out for him even when he is wrong. Hey, NASDAQ killer, how you doing this morning? We had you missed yesterday. We had another guy from Morocco stop by. I was like, NASDAQ killer's not here. You guys could commiserate with all of the crazy rules they've got over there to prevent you from trading. There's somebody in chat that really wants to think that technical analysis is great, and I'm kind of, whenever this happens, I'm always sitting here like, okay, how much should I rain on his parade? This didn't look so hot going into the open. Bed Bath and Beyond, man. Kevin's success on YouTube with the stock market is really perplexing to me, because the videos that he makes, I don't understand why the algorithm likes them. I think it is probably the case that like he built his following off of the real estate thing, and that allows him to do things with the YouTube algorithm that wouldn't work for other people. You know what I mean? Because I don't find any of his videos interesting. This stuff that he posts on TikTok is interesting and engaging, but then it's always stuff that I already know, and I just skip it. If there's a will, there is a way. That means if I need to make money to go to Dubai, I will. I mean, Dubai sounds like a nice place. If I was Islamic, I think that hanging out in Dubai would be awesome. Raven, you just found, hey, thank you very much. What video did you find the channel from? Nassim Taleb is always on Twitter, cautioning us against going to Dubai. So that makes me a little bit nervous. But my parents went there one time and they loved it. They loved it. Bloomberg forces SEC to provide cost analysis of primary issuance database. Yeah. Stock pre-market lookup. Oh, okay. So you just found us because we had that there's a Bed Bath and Beyond bloodbath going on overnight. Well, so I'll try and see what I can do to help you out here, Craven, because what I typically specialize in is interest rate futures, right? So a lot of the stuff that I would tend to talk about might be a little bit like, oh, I don't see how this is relevant. But I tell you what, I have some videos on this channel, especially the ones about the stylized behaviors of markets and the inelastic markets hypothesis, that if you want to day trade is advanced knowledge that will change everything for you. Or at the very least, it will make you go, oh, there's all these things that people on the internet say, and I understand now why it's total bullcrap, and I should just stop listening to them, right? But what I've been seeing in Bed Bath and Beyond is insiders selling, man. I was watching it most closely on, what was it, the 17th? Yeah, so right here. So I was watching through this area right here most closely. And what I saw was there was a lot of selling in this thing. Like, it was coming up. So here's what happens. Here's an order book, okay? This is the 10-year treasury. Blue column are bids. Orange columns are asks. And then the columns in the middle are buys and sells. Market orders. Excuse me. My stomach is like re-equalizing the pressure here. Okay, so what I was seeing in Bed Bath & Beyond was like, you would see somebody come in and like buy everything out. There'd be like, here's everything on the book, and they would just buy like everything there. Some large market order. Okay, so this looks to me like a retail trader that doesn't really know what they're doing and doesn't know to kind of how do we say scale in. There you go. They don't know that you should scale into something. They just want to make as big of a splash as they can, right? And they'll push it up. But then, like, when it does go up, it's like the offers are canceling. It's not like the market orders are hitting it and there's more market orders coming in and buying than there are market orders selling or something like that. The limit orders just let it come. And then when the guys hit it, the limit orders just take the hits and absorb it. So that to me is indicative of people that are they can see that there are really aggressive buyers and they're letting the buyers push it up and selling it into them. So I could see that whole day. It did not surprise me in the least bit that at the end of the day, when people started taking profit taking and everything, that it plunged. So yeah, that place is a disaster. I don't think that I would want to be involved in that one. I mean, it was a good trade if you were in on it early, right? But I think the trade is over. And now who knows? It might come and flatten out and then they spike it again. But if it does spike it again, they're unlikely to have as much hype behind them as they did before. Well, I'm not seeing any like headlines or hearing anything from the Federal Reserve or anything, but the treasuries are pushing down pretty aggressively. And maybe now we'll get that 3% in the 10-year. I thought, I said 2.97, didn't I? It did go a little bit past that, but 2.97 would have been a bad trade considering that you'd made $20 by now. I don't think it's worth it. It seems, though, that this is a little bit more slippery than I expect, especially with the liquidity that we have out here. But the liquidity seems to be pulling when it moves around, so it's very slippery, and I'm not seeing a whole lot of autocorrelation in the order flow. So I don't think that this move that I see here in the treasury is like a large meta order, some big players coming in and consistently selling it. It's just kind of ranging around and probably falling mostly due to currency correlations. The 6J is getting hammered right now. So that does not necessarily lend itself to a very, very good predictor of order flow for me to come in and buy it here. But I do think that 3% is really likely to get touched. So you could maybe make $15 there. They are going out of business? No, Bed Bath & Beyond. So this one, I don't actually understand this one because I always enjoy myself. I haven't been to Bed Bath & Beyond in a long time, and I don't buy very much when I go there, but I've always enjoyed going to Bed Bath & Beyond. I've always enjoyed going to that store, so I'm a little surprised to hear that they're doing so poorly. But it's probably the case, as is the case with many retail stores, where it's not so much that the store is really bad as it is that it's just like being managed into the ground. You know? I remember I used to work at CompUSA, and when Best Buy came into prominence, that really hurt CompUSA. And as that happened, the people running that store just flopped all around. It was crazy, flopping all over the place. Oh, with all of their incentives, and it was one of those things that was like, we need to sell a installation pack every day, which was like this $200 service, which was a lot of money back then, for somebody to come in and like install your network for you, which is like, plug the router in and follow the instruction manual. It's not hard, but they were offering a lot of money for this to people that they're really taking advantage of people that just don't know any better. And they're pushing this really, really crazy hard. And I'm like, this ain't going to save your business. No, it's not. But when these companies are doing poorly, they always start to flail around like that. The executives at the top, they start to flail around because I don't think that they can really understand the picture. They just think that we got to be decisive and we got to be aggressive and we're going to do the thing and we're going to win. It never works. It never works. And I'm wondering if a similar sort of thing is going on at Bed Bath & Beyond right now. Because like this guy, he came in, he bought some of the shares and then everybody pumped it up and then he sold right onto him. Like, does that sound to you like somebody that's really in this for the company and for the long haul? And like, here's the other thing is like, a lot of people were saying, oh, we want GameStop to stay around. We want AMC to stay around. I want AMC to stay around. Like, that was a good one. That was one. Hey, movie theater should still be here. I want to go to the movies. Okay. But Bed Bath & Beyond, is anybody like a strong Bed Bath & Beyond cultist or whatever? Like, come on. I haven't been to the store in a while. I should go. But when I go, I don't buy anything. It's just it's a bunch of interesting junk, but it's still junk, Got to be careful to bring the wife, because my wife loves junk. She not junk. She likes for some reason they like little things like the girls, my stepdaughters. If they get a toy, it has to have like 1 million parts to it and stuff. You know what I mean? I hate that. But let's see here. Fed's barking. The amount of money in overnight repo means the Fed is nowhere near the edge of a balance sheet low point. I do think. Oh, I don't know what's going on here with Financial Juice. I don't think I clicked and launched it because I wasn't hearing them. It's got to be some of his hawkish comments providing the impetus for lower here. Okay, 2.992. See, 2985 would have been good, yeah. But if they get to 3%, that would be, maybe 0.3 in the treasuries. I need to come back over here and look on the volume profile. Like, where would that? We're kind of in a no man's land here. So I'm going to say 0.4. 0.4. Washington Post's columnist's very weird plea to Biden. Pardon Trump? What? What the heck? Okay. Wow, New York City taxi driver beaten to death in broad daylight. What? New York, what are you doing? Oh, that's a gang of kids, and they're beating him. And was that just punching him? They thought that they were just beating the kid up, and it ended up killing him. That sucks. But I wonder what started the confrontation. Just looks like a bunch of kids being thugs. Maybe not actually so deserving of focus. Still, New York, you got some problems. You got to turn around. You got to turn around. When I was in New York, it felt like Disneyland. seems they do want to help us take precautions. No, when I went to New York, it felt like being in Disneyland. And now, I mean, I haven't been there since. But from what I read, it sounds scary. From what I read, it sounds scary. I don't know if I want to go. I want to go to, I don't think my wife has ever been. I want to kind of go on a vacation over there. Hey, maybe we should do that next week. I could totally take a vacation next week to New York. Let's do it. No, but I don't want to pay for hotels. That's the issue, is that the hotel, I can fly there anytime I want, but I'd have to pay for a hotel. And hotels are expensive over there. I would probably need to save up a few K if I was going to go to New York for a week. Would be fun though. Now is probably not the best time because we have an infant. Why, you just said it's dangerous? I know, but I want to go back. I loved it. The time that I spent in New York, I really enjoyed it. First time I went to New York on vacation, I was kind of like, what is with this place? But when I actually lived there, I get it. It's a fun place to live. Man, they're pushing. There was a $15 trade in there for us. I don't really want to trade it today, but I mean, part of what was so fun about working there was that every evening, the coworkers would go and find a different bar and just drink all night. I didn't drink. I just sat and watched them get drunk, but it sure was fun. And I'm not a super social person, but I was able to practice my being social, and I felt like I did an okay job back then. Yeah, I miss it. I do kind of wonder. Like at the time I was married, I was to my first wife, and we never were really able to have a kid. Was the thing with her. Like she had fertility problems. I don't think that she's ever going to be able to have a baby, which is like really, oh man. I can only imagine what kind of anguish that must be putting on my ex not being able to have kids. But I think she's pretty much decided that it's just not going to happen, and getting a hysterectomy or something like that. Because it's just been causing too many problems, which really sucks because that's all she ever wanted, man. All she ever wanted. Maybe you adopt a child, right? Well, but eventually that didn't work out, and she left. And so it was like, the whole time I'm like, well, I still want to live in Utah, and we're going to have kids, and we're going to have kids soon, and all this sort of thing, right? But that's not what happened. What I should have done is I should have said, hey, I really like New York. Why don't I transfer over to New York and work over here? And then I might have had a better segue into trading professionally, Coulda, woulda, shoulda. Now I actually do have the family, so like it all worked out, but with somebody else. But yeah, it would have been nice to have spent those years in New York instead. And then you're making, and you switch over here to Utah, and everything's cheaper, and it's like really advantageous for you. Well, oh well. Wow, that snapped back really quick. Where was I looking at? 2985? I do still think that we're going to touch 3% today. It's just like, how much adverse excursion would you have to take? I'm not sure. It's called life. It really is. It never works out the way that, there's always going to be, you could go back and think about it and say, like, I could have done this or should have done this, right? And that's like one of the things that I still think about right now is like, I would like to go and work in New York. It's just that I don't want to take my family to New York, and I don't want to deal with the cost of living in New York. It's insane. And if it was just me, I could probably deal with it. But like, one of the things is when you have a family, it's you have a lot less control over your expenses. when I lived in New York, well, they were paying a stipend, but I spent considerably less money than they said that I was going to need to, because I just like ate super cheap and stuff. Like, you can live for super cheap in New York if you want to, right? That's something that I find kind of interesting about it. So there is like there's a lot of people living there that are like super rich, but then there's also a lot of people living there that are like super dirt poor. And so there's areas of New York that cater to both. So you can live super cheap if you want to, and that's what I did. And I thought that was kind of fun too, actually, to be honest. Like, I think saving money is fun to me. Anyways, you can only do what you dedicate yourself to. Yeah. Well, it's an interesting thing, because really you can choose to do anything that you want, right? I had other interests. I put a lot of time in the past into making trance music. I don't think that I ever did that with the thought that, I'm become a famous DJ or anything like that. I think I always kind of knew that was not only is it very rare to be that successful in a field like that, but that it wouldn't provide me the kind of life that I wanted to live. So I didn't take it so seriously. But I had a YouTube channel where I had posted some videos on things that had done quite well. And I probably could have just continued to do that and built a really good YouTube channel on that. I don't know if that would have been as much fun as day trading. But, like, I could have focused on that is the point. And why did I, or why did I not? Well, a large part of it was that I did end up getting a job at one of the big US banks, right? And they understand the significance of purpose. And they really try and instill in the employees' purpose, that the reason we're there is to help foster new economic growth and opportunities for people, and that it's an important role in the world that we need to do, and we need to do a better job at. And when you come into purpose, then it's like, what is the highest purposes that I can actually dedicate myself to? And I do think that finance is one of them. Not only because finance is just a very important topic in general, but because I have the mind and skills that are really beneficial in that world, right? But the other higher purpose is having kids. I don't know why so many people in this culture these days don't understand the importance of that, and are like, nah, I don't want kids. This doesn't sound fun. They seem to think that having kids is just supposed to be all fun. And if you don't enjoy kids, then don't have them. That's not it, my friend. It's because you need people. We're going to have a population decline. It's a big problem. Now, I'm not so good at that thing compared to finance, but I'm getting better at it. We're getting better at it. Those are real purposes. So in the end, I do feel like I am doing the things that I'm supposed to be doing with my life. Is just that when it comes to what I do with finance, I just always feel like I could be doing so much more. It's always, I got to get to this thing so I can do this, and so I can do this, I just want to do more. I feel like that I haven't completely fulfilled my obligation to society. On one hand, here I had some trades 2 weeks ago or so that were really big. I haven't really taken, I think I've taken like one trade since then. It is summer and all that, right? But when I took those trades, I felt a lot more free. I felt like, hey, I finally caught that really big winner that I thought I deserved. And my account is up. I don't have anything to prove to anybody. I never did, but I just really wanted to catch that big winner. And now that I've done it, it's kind of like I can kind of relax or something, But then I start sitting down and thinking about it, and I'm like, yeah, but there's so much more I can do. I'm only reaching so many people, and I have all of this really great content on the channel. and those videos do okay. But really, we want millions of people to view those videos because it's significant stuff. And I really hope that because of me, and because I think I'm the only one that's going to do it. I don't think anybody else is going to do it. I really hope that in the future, that because of me, that retail traders do not waste their time with technical analysis that has been proven to not work. There's so many people wasting their time with strategies that don't work. And that's all time and effort that could be spent on more productive analysis and things that'll actually help the world and the market, you know? And so we got to get that out to people. And you know, hopefully we get some stuff on the channel that blows up really big and brings more people to those specific videos. You know? I hate kids, but I'm planning to get at least 6, not guaranteeing I will remember their names or birthdays or even who they are. So here's my thing about kids. So, since you bring it up, NASDAQ killer. So here's my advice to you. Everybody hates kids before they have them. One of the common stories or themes that you'll see, you know, there's like different archetypes of stories, like hero's journey and all that sort of thing. Well, there's that level, but then there's another level about like what area are you developing in? And one of the most common stories that we have is guy hates kids, guy has to protect kids from something, and at the end of it, he decides maybe kids aren't so bad. Okay, so like a good example of this story is Jurassic Park. Okay, that's the story of Jurassic Park. Is the guy, the Sam Neill's character, does not like kids, and he has to protect the kids for a few days, and by the end of it, he realizes the kids aren't so bad, right? The reality is that it's not that you hate kids; it's that you hate other people's kids. Once they're your kids, and the way that they their approach to the world, I don't know. I'm not quite sure I understand how it is that you shape this, but there's definitely something to the way that my son looks at the world and approaches things is different from my stepkids. Even though he can't, he doesn't even talk yet, right? But it is just kind of like you can just kind of direct their behavior towards you know what should be best for them to appropriately interact with society and stuff like that. This is a really weird thing. When they're your kids, it's completely different. Now, part of it is that there are like chemicals involved and stuff like that, right? And another part of it is that their minds are going to be closer to you, and you're going to be able to understand them a lot better than you can any other person, right? Especially if you know, people like you and me. I'm ADHD. I think I remember you saying that you were a little autistic, you know. So your kids will probably be a little bit autistic, but you'll understand it because you dealt with that and you'll know what to do about it, right? And other people won't. That plays a really big factor. Yeah. You'll love your kids. Everybody always hates other people's kids. So I see all these people out there saying, oh yeah, I don't like kids. I'm just not going to have them. Yeah, it's a story as old as time. Everybody says that, and then they get their own kid and they love them. Not guaranteeing I will remember their names or birthdays. Oh man, I don't remember their birthdays very well. I have them in my phone though. I have to tell you, if you have ADHD, the best thing that you can do to help you with, you know, kind of ADHD problems is to externalize everything. Because one of the biggest problems is that your short-term memory isn't very good. And if you're not looking at something, it disappears from your mind. You don't think it back up. And so if you have something where you can actively see it, and like I'm telling you, you can't just put it in your phone, okay? Like you externalize it, but you can't just put it in your phone. It has to be somewhere where you can see it. I have this sticky pad, and it goes right in front of me. So it is in a place where I see it all the time, and I think about, okay, did I do this? Did I do this? And then I just cross things off as I go. Oh, so I'm just looking at it right now, and I'm remembering. Oh yes, at 12:20, I have to take the dog to get shots. Externalize it. I am a dietary autistic when I eat the wrong. Well, but that's all autistic, right? So that so if I don't sleep very well, like on Wednesday, was it? Wednesday was it that I just had not slept very well, and so I was pretty cautious in trading because I knew that. But like during the day for working, I did not get a whole lot done. I got a lot done yesterday though. I hope I get a lot done this weekend. Although I'm thinking, based on things, I might not be putting out another video for a few weeks. Now maybe I will be putting one out on the 29th. Maybe I'll be putting one out on the 29th, so I can write that, but I might have more time to spend on like writing indicators and stuff like that. Some of the other things on my list that I kind of been putting off. And I got to continue to put time into the Series 65 and stuff. I've still got about 5 chapters of that, of flashcards to go, really review that stuff and memorize it. Start doing the tests. Maybe I can schedule something for October. Well, oh wow, this is okay. So let's read this little story here on Zero Hedge. With me being ADHD and stuff. Ahead of today's 2.1 trillion options expiration, here's why futures are sharply lower. Nomura warns apocalyptic German PPI triggers unclench from gamma gravity into options expiration. Simply put, inflation is not going to roll over in smooth linear fashion and likely stays sticky higher above target, keeping central banks in the uncomfortable, restrictive for longer territory required. We're seeing it here a little bit this morning, but I'm expecting that next week and then especially after that we will start to see rates adjust to higher, and that the 2-year will probably get to 3.5. So what I'm seeing, like right now, it's kind of like slow summer burn, and so they're not doing it, but I think it's coming. I think it's going to be another one of those things like it was at the beginning of the year, where you just see another really strong push higher in rates out of nowhere, and everybody's like, how did we not see this coming? And it was like, well, the Federal Reserve kind of said that, it's going to happen. That's at least that's what the tea leaves seem to suggest is the direction we're going right now. I guess we'll see. But you know what, guys? I know it's only 8 o'clock, but I am going to end the stream early here today. So I will see you guys. So have a good day. I'll see you guys on Monday. Get your rest. I mean, the next 2 weeks, get it all out of you. Vacation, whatever it is that you need to do, because September and October might be crazy. Okay? Stay profitable, friends, or at least don't blow it all, all right?